All right, cool. So we're live and recording now. Unfortunately, with Loom, you all won't be able to hear the others on the line, but I'll try my best to recap for anybody who's wanting to know why I'm answering specific questions. But we've got KJ on the line, Sean, Kevin, and PJ. We'll be going through the primer, which is an overview of the signals for TACBotz. Then we'll skip into topic one, like where we want to spend most of our time talking about day trading. How to get in, how to get out, what time frame to use for intraday trades, how to spot those good opportunities, what to watch out for. And then the second topic, if time permits or if there's a lot of interest, we'll talk about swing trades as well. To be honest, I haven't done a lot of swing trading, but I have studied the signals at least for swing trading, so I don't have as many live results. In our beta test, though, we did have one of the LKS members whose name is I think it's Bonsai Boy. He actually was our swing trade kind of like double check, and he found a lot of confluence with the way that he trades and our signals in its earliest form. So he recently got back and is going to start looking at our latest signals and let us know if like our latest signals also add even more confluence to his trading style, which would usually be over multiple days. All right, and then thanks for joining, Enkush. I see you just hopped on too. Anybody who wants to ask a question can go ahead and throw it in the general chat. I'll do my best to repeat the question since the recording I'm using will not catch anybody else's voice, it'll only catch mine. So if you see me recapping or repeating, just bear with me. That's just so I can let those who are watching the recording know why I'm answering certain questions. And then if anybody has a lot of insights they want to share, I'll definitely sit back and listen, but I might at the end of all that just kind of recap really quickly what I heard. All right. Yeah. So that's mostly, I think you asked for stock, but I'm guessing you're talking about not just the like shares, but also options trades. So one of the things right now that we're offering, and I'll show an example of that, is we have a dashboard, which is always a really good place to start the trade. Let me just find a window where I'm not editing the website. Okay, so we've got a website. Let me know if you can see my screen. Okay, cool. So this is our website, TACBotz.com, and what a lot of us are now doing is part of our oh, let me try to reshare my screen. Give me 1 second. All right, can you guys see the dashboard? All right, so I'll just start the workflow over. So if you were to start at TACBotz.com, if you know the link directly, you can just go to /dashboard, but for those who don't, you just go to the website. It's the second link on the top. And this is actually a good way to start the day, is before you open up TradingView or before you start entering trades or try to chase any movement. A lot of times it's actually good just to see what fired the prior day. Oh, interesting. That's never happened before. It was just working a second ago. What happened the prior day and also what's happening maybe pre-market if the ticker itself is moving. So I'm going to take out crypto for now since I know you're mostly interested in equities. But we can put crypto back on later if we want. So in this case, like let's assume that it was tomorrow already, like in the morning, and the market just opened for the 22nd. Like I can look back on what happened at market close, like starting at like this last signal came in at 3:15, there's 3:10. And I can scan these signals, and actually what I'm mostly interested in is not just these quick scalp entries that we're looking at here, but actually the support and resistance that came in. So I can further filter it and say type of signal, BullTAC, BearTAC. And so these are, this is kind of like a proprietary way that we've detected any kind of market manipulation that creates actually market structure, where the top and bottom of these candles usually have very strong price reactions, whether it's immediately or later on. Sometimes these can last like multiple days, where that support and resistance actually still matters days after the price is left and come back. So usually what I do is I look to see, is there anything that happened at the close of day that could influence the rest of today. Yeah, these are all converted to Eastern Standard Time. So I think originally it was GMT, but we did a conversion in the back end to get it out as EST. So yeah, it's going to be a little pain in the neck if you like are only looking at your own time zone in TradingView or whatever charting software you use. But this is all referenced in terms of EST. So 9:30 to 4 for the market hours. And what we'll do is we'll also like kind of understand like if it's a ton of BearTACs. Now these signals don't mean there's going to be this massive market dump or that there was like going to be a significant push down for the next 4 or 5 hours. That's not what it means. It just means that to make this support and resistance level, it was a down candle, like a red candle that created it. And we often see that these are just quick traps to create the structure which the market reacts to. And if you were to go short on all of these, you'd probably lose money if you held them for too long on like 9 out of 10. Because usually these are bear traps, not actual bearish movements. And the opposite is for BullTAC, maybe 9 out of 10 times, if you're an option scalper and you just go long blindly off of these BullTACs, you might make some money in the first like 5-10 minutes. But if you keep holding without actually managing that position, it might pull back sharply. And sometimes that'll hit your stop limit, or sometimes that'll put you in such a punishing position you just want to take your losses and leave. But if you actually were to study these levels well enough, you can either catch a move directly off of that signal, or the next time the price touches that level, which usually doesn't take more than like a few minutes to an hour to actually come back and bounce or touch that level again, you'll actually normally see a massive momentum push in one direction or the other. And so what we like to do is keep these levels in mind, or anytime there's a ticker with one of these that was recently fired, we expect at some point during the day, especially on the 5-minute chart, that there will be a nice impulsive move. So I'll take one example, like space, right? So it came in at 1:10 p.m., so let's take a look at that. And keep in mind, like as the market's running, you're going to get more and more signals like firing onto that dashboard. So a lot of times we just kind of like in our brains, we kind of scrub the ones that happened too far back, and we only focus on the ones that were more recent. But here's an example of, let's see. There we go. Yeah, so this was 1 p.m., right? And if we zoom in on it, right, this is the bear candle that I was talking about that created that BearTAC level. And it creates these two lines automatically in the chart, so you don't have to draw them yourself. So you get a reference of, okay, this candle matters. It was a BearTAC. Top and bottom are these lines. So you see how it pushes down really quickly? Like, we've learned better than to chase this down movement, which a lot of people say, like, oh, wow, look at the candle. It's massive. Let's go short. But we know that at some point there's going to be a reversal, and we actually don't want to get caught in that reversal. We actually want to wait and look at these lines as structure. Is it going to be resistance, or is it going to be support? And in this case, this candle looked like it was trying to be pushed back down as resistance, but the next candle that opened just crushed through these lines, right? It started here as support, and it crushed through, and it closed up here. And this is the first full candle close over that line. So anything going forward, I would say that on this BearTAC would have been, I'm looking for trends that are going up, like basically long positions, as long as I don't come back down and break this line. So if I entered here, I can get a quick scalp up, but it might come back down. And if I'm holding it, I just don't want it to cut through that line. I'll keep holding. Or I can do a quick scalp up, get out when I see some pretty bad, nasty pullbacks, but get back in when I see that it's still leaving like that line. So price action wise, I get like a higher low, right? So even though this was the absolute bottom, most times you can't tell when that's going to be, right? It's like a guess. You're basically catching a falling knife. So if you wait for structure, which is caused by these BearTACs levels, you can say that's my first entry. I can either hold it through the chop, or I just get out for a quick scalp and I re-enter and I go for the next move up. This background color is actually complementary to that move, which is the dark green says that you've got this slight trend up, and the solid green, like the more brighter green, is like you've got a pretty strong uptrend right there. So if you start your position somewhere at the beginning of the dark green and then you hold it through the light green, you could pretty much, even if you exited here, you're still making profits, right? Yeah, would the background be more solid on the higher time frame? It should be, yeah. So let me just quickly flip to that so we can take a look. I don't have the 10 minutes, but let me go ahead and add it. I actually used to look at the 10 and I stopped using it recently. I know a lot of people prefer it, so I'll add it in. Okay, so it does start with a dark green and then it goes to a more solid green, but what you can see is instead of it cutting out, um, on the 5 minute cutout right here, right, it was no longer green, but on the 10 minute, it stays green the whole way through. And so what that's doing is it's mathematically trying to calculate, like for each move that we've done, is the uptrend broken, yes or no, right? This is a weak uptrend, and then this is a strong uptrend. And so to break this uptrend, it's going to take some pretty nasty candles down to like get it to stop. So usually you don't want to like hold it past the background change. You actually want to get out somewhere close to the edge of that background change because you're already giving up so much momentum on the way up that you don't want to like sit and wait for too long for it to like completely go down. Yeah, definitely not just off of the TAC signals alone. You'd probably have to go down to like the 3 or the 1 minute to see any significant volume signals. But what you can see is this doesn't mean that it's going to start zooming in the market open tomorrow. But what it did say was at the end of the market, there was a surge in volume. This is very common for like power hour, for like volume to kick in. So what we're saying is that if you wanted to scalp at the end of the day, like you could probably try to catch that, but it was pretty violent. I probably wouldn't have done like a new trade starting right there, especially given it's Friday and it's lottos. Um, but let's take a look at just the 3 minute to see if the story changes a little bit. Okay, so we have this signal called small volume in, which means we've got a volume trend. Volume's increasing for the buyers. So that's a potential like entry right there for a small volume in. And you can't see anything to tell you to get out other than the price action is like basically like as big as that candle is, that one's just as big on the downside. But when you see this small volume in pointing down, you know that cancels this one out, the small volume in. So if you get in here, you definitely want to get out by that one, and that happens to correspond to where the background stops painting green anyways. But I actually don't like trading these small volume ins. I actually prefer, and it's funny, like space was very choppy, so this is not the best of examples, but I'm going to keep going down in time frame to see if I can spot cleaner. And that's actually what happens is if you have lower volume and a lot more choppy price action, you end up having to go to a lower time frame, and that means a lot more trading, which in options land you don't want to overtrade because then you drain your capital account. Unless you're only trading like a tiny fraction of your account, but a lot of people like to just like trade through their entire cash for the day and then start fresh the next day. Like you don't want to overcommit to too many trades and drain all your capital. Um, so honestly speaking, like space is not a great one to trade. Yeah. Yeah, it's mostly about repeatability for us. So we just want to try to make it as safe as possible, and the more volume that you get to like paint that in signal, the more likely you'll get that clean move and then a clear out signal. That's what we're looking for is the pairing of large volume in to volume out. Um, that it doesn't always happen. So the backup is if it doesn't give you a volume out, you look for an opposing signal or you just look for a background shift, and that's your reason to get out. Yeah. Yep. So So what we're actually looking to do is we want to combine all the TAC levels into one signal. Let's just say TAC, and then we don't really have to say bear or bull because you could always go to the chart to see, because we don't actually think that these guarantee direction anyways. So to tell you if it's bull or bear, it's more of like, be careful of a trap in that direction, but at the end of the day, the levels matter a lot, right? So we do want to notify you that there's a TAC, but we also want to notify you that there's a large volume in and also a volume out signal. Like we want to give you those 3 bits of information. So we're going to be working on some changes to the back end to get that data in. But we try to put in as many tickers we can that are pretty popular, because we currently have a limit due to trading view as to how many tickers we could put on here. They limit us to 400 alerts, and we've already pretty much used up all 400 for crypto equities across 4 signals. So we're going to have to like reshuffle the deck a little bit to make sure that we keep the same number of tickers available, but we also are now trying to add more signals in. So that was a good question. Like, how do you get started? Usually we do look at this, but over time, I think you'll find that you start trading the tickers you like or that you're the most confident with. And there's nothing wrong with that. It's just that if you're looking for a different ticker to trade, this might be a good way to like either come in with a fresh perspective or have no bias. Because sometimes you fall in love with the same ticker and you can only trade in the one direction that you've been winning in. And it just takes that one trade that you get overconfident to demolish your previous gains. Thanks, PJ. Just to recap, because I typed it on the screen, but for people who are not going to read and just listen to the audio, so PJ, you basically shared your experience with why you started using the TACBotz dashboard. I guess it's a shameless plug because you helped to create it, so good job there. But hey, if you build something that works and you use it and you get real results, that's like a fantastic, like, it's like not only am I like the president of the Hair Club for Men, I'm also like one of the users, right? So it sounds like number one is before the dashboard or before you started using it, you used to like trade the usual suspects: Facebook, Apple, SPY, mRNA, and a couple more that like AMD that you kind of like fell in love with almost. And that means that you were expecting the same gains on the same tickers, but you'd also, just to guarantee that, have to like study all night, like just to get a directional bias to say, is it going to go up or down? And after winning at the beginning and then starting to kind of like, accrue some losses by not being able to like decouple your mindset away from those tickers and the directions, you did start using the dashboard, and it sounds like since early Feb, you've been able to avoid emotions, make mostly like significant gains, except for one trade like on Facebook. And your goal is not to catch tops and bottoms. You just want to go find whatever's moving, trade that, get in, get out, and get on your way, right? Okay. And I mean, he's not going to admit it, but I've been seeing his gains. Like, you used to make really decent profits. Now they're like super decent profits. So there's definitely a performance increase as well that I've noticed, and definitely good job to you for like grinding through it to get to that point. Okay, I'm not going to repeat all the things that were just said because I think that's already going to take up some time. But I mean, just to recap it, it does seem like the main question was just how to handle some of that chop. And we'll go through some live examples on what we could do. Do you have a ticker in particular that you were thinking of, KJ, that happened on Friday or Thursday? Okay. That's always a good one. All right, so we'll just look at, yeah, absolutely. So we'll take a look at Tesla starting on the 18th. Um, I'm going to actually use the 5 minute just by default. It's usually the one that I would use to screen out any kind of like bad signals. And then we'll also take PJ's approach for waiting the first 15 minutes, just kind of see like what would happen if we did that. And I'm going to use the replay so that we don't have like forward-looking bias, right? So let's assume that this was just like a fresh view of the market based on all the signals. You can see that because we haven't opened for the day yet, like we're going to get a TAC signal that shows up right after the market open. But previously, before the market opened on the 17th, we had a market like kind of near the afternoon. There was a TAC signal, so we've got these two levels. So to confirm what PJ was saying, if I was like sitting here waiting for Tesla to open on the market, and I looked on the dashboard and it showed me that there was a BearTAC on Tesla. One is I'm going to keep an eye on these two levels. So can it break above that? If it can break above these levels, and I'll just go ahead and draw the lines in because they will disappear once the next BearTAC comes in. If I could break these levels, I kind of want to see it get above the top one before I go long, because otherwise there's still a lot of like chop or down pressure. So probabilistically, if I want to have a nice clean uptrend, I got to get above the top line. All right, so let's go ahead and play it. All right, that was really fast. I should probably slow down the speed. So the first thing you see here is that first candle was actually like it gapped up, right? Just like PJ was saying, it gapped up. Everybody's thinking, well, look how high it's gone in the morning. Let's go calls, right? That's very common for that to happen. Is the higher it gaps, the more people want to grab calls. The lower it gaps, the more people want to buy puts. But the first thing it did was after open, it just barely wicked up and then it just dropped completely, right? So what is this candle gap doing? Probably stopping out a ton of people who are holding overnight. Like any open interest on puts were probably like at least hurt a lot, if not stopped out, or even like got to the point where their contracts are now kind of worthless by that wick, and it drops down, right? So one is you trap a bunch of bulls. Two is you probably killed a lot of overnight bears in just that move alone, assuming that they didn't take like very long dated contracts. This is like near the end of the week, so we're talking lottos now, right? And it happens so quickly that a lot of people don't have time to set up their lotto plays. Like you have to just blindly go into it because you wanted to versus reading the market. So if you start chasing this candle down though, and you're like, oh cool, this is time for puts, right? It's exactly what we said in the BearTACs that show up. You're going to get a pull down, great, but if you're not fast, you're going to get trapped in the move up, right? So it's mostly designed to hurt the bears, at least at first, because it gets you in, then it reverses so hard that you pretty much get stopped out if you have a stop limit, right? Or if you have like a percent, if you have like a price that you want to get out at, or if you have a percent that you're willing to endure, like this is really painful usually. But if you're PJ and you're waiting for the first, second, and third candle to form before you decide what to do, you can, one, see that there's an overall downtrend, right? So you probably don't want to go along just like he said. But you also don't want to get caught in this trap either, right? So in this case, he could take this small volume in, but I know because he's a volume trader, he's not going to. He's going to wait for these spikes to show up before he actually enters. So this thing goes up, and then now it's starting to come back down. And what it could do for the rest of the day is just this, consolidate on this line and do nothing, and you don't want to get caught in either direction if that happens. You do want it to pick a direction before you take your trade, right? So let's play a couple more candles. All right, you see the background still kind of purple, right? And already you could tell that the price action is now starting to get more bearish because you've got, this was your high, that's your next high, so you're getting lower highs, right? And you're getting lower lows. But you still don't have any pure reason to get in just yet. So keep playing it. Now we're getting some sideways chop, a little bit more down. Now we're going super down, right? All right, so the question is, how do you get in on this short if you're trying to play Tesla bearish? Like you said, if you start on a higher time frame to confirm what's going on, you can always drop to a lower time frame. What I would look for is anything that's around this line. I want to know if we're going to go up or down. Are we going to treat this as support or resistance? Oh, actually, sorry, let me go back to the 5 minute. I'm sorry, I didn't catch the question. It kind of cut out. Yeah, yeah, I can add them. What'll happen though is if you use extended hours, it will change the TAC levels. It's not that they're wrong. It's just that they're calculating off of a different set of data. So you have to take it with a grain of salt, which is you're now consuming a lot of data with like nearly no volume. So you can't treat that as market data. You can only treat that as manipulated data. Like anybody who has yeah, anybody who has access to outside market hours or that's actually the best time for manipulation to happen. Like gapping up and down is easier when nobody else is in the way to stop the trade. Oh, sorry. Um, no, I would actually just make sure that I drop some anchors on the lines that I saw from the regular hours because that's based on market participation and use those as stronger influencers than the actual after hours ones that came in. But if you're let's say trading like small cap, like where the shares do trade quite a bit after hours and before market opens, then you can still use extended hours and the data will be great because you don't see this massive drop in volume. But if you're going to look at extended hours, like yes, indicators tend to like pick up better if you use them, but you're using data that technically doesn't really represent the true like what's going to happen when the market opens, right? And that's why there's a lot of fake outs and shakeouts in the morning is that people see the gap and they assume that the gap is going to be a continuation. Sometimes it is, but a lot of times it's not. And that's because what caused it to gap was not the market. It was more just overnight manipulation. Um, yeah. Yeah, pre-market is good to at least spot like where if someone is playing games with the pre-market or post-market, it's good to know what their tolerances are, right? Like that, those levels still matter, but it's just the indicators. If you use indicators, not a lot of people do when they do pre-market, but if someone's like, well, I just like how the MACD looks, right? The crossings, or I like how stochastic bounces, or which direction RSI is going. Like if you use this data for pre-market, you're getting a lot of false data and it'll give you kind of like a false sense of confidence that like okay it's so oversold it's got it like but it's like that was with zero participation in the market like how do we know that's truly oversold, right? Or like oh MACD's like crossing up that's significant or like VWAP or moving averages are trending well. It's like yeah, but that's with no market participation, so you have to take those with a grain of salt. So if you find that like in the beginning of the day it's hard for you to use like pre-market data to trade consistently, a lot of times it has to do with the fact that nothing that happened overnight is going to determine what's going to happen when the market opens. It's more of just like a way to get continuous data so that you don't break any models you have, but it's not like good data. It's like kind of manipulated data at the end of the day. It's just something to watch out for is like don't buy too much into what you see pre-market or post-market. Like that's just it's good to know. It's just not like if I had to weigh it, I would say 90% of my weight is for what happens during market hours, and only 10% of what I weigh in my decisions is based on pre or post-market. Um, that's different for futures. Futures is like 24/7 like crypto, so there's no like worry of pre and post. But so if you're like looking at S&P 500 futures and then taking that data and bring it in, like that's more significant. But if you're looking at like the very little Tesla trading that happened overnight, um, that's harder to say like that's going to have a huge bearing on what's going to happen today. Happy to be like corrected on that, but I've just in my experience I've had a hard time using whether it was indicators or signals or just in general market trends. I've had a hard time correlating the pre-market activity to what actually happened during the day and like how to actually get in and out of my trades. Yeah, but I mean, it's helpful if you can use that as an edge to know like which direction to trade or not trade in the morning. That's still fine. It's just that you want to make sure it is consistent. It's not leading you into like half good trades, half bad trades. If it's like 50-50, then technically it's random data. Like if you've got to have like a more than 50% win rate on the method you're using to really consider it an edge. Otherwise, you could technically flip a coin and be just as good. So just definitely keep an eye on it. Is like, what's the win rate if you're using that data? But let's go ahead and drop to the 3-minute just to kind of see if there's different data that we see. Because like you said, if you start the day on one time frame, you might like zoom in, go further down to like see if there's any other data that you could use. Let me put it kind of back to here, to the beginning. And what I think, if you were to be forced to trade like the first thing in the morning, I would say the 1 minute is kind of your friend because you can kind of see trends develop much faster. So I would say not right away because we didn't get the BearTAC on this view yet, but right after the first few candles, I'm going to start paying attention to these 3 levels. So these 2 came from the prior day on the 5 minute, and then this one came from like the market open, right? So I'm going to look at these 3 lines like very closely and think about what's the price action reacting off of this level. So on the 1 minute, you see that it says small volume in, so that's not a bad place to start a starter, but as this thing curls up, you want to get out, right? Like when the background breaks out. So if you did take like a small trade, you'd want to like get in a short there and then get out right here. And then as the price goes further to that line, you want to see what happens on that line. Okay. So you can see like there's a lot of resistance on the way up. So to me, like when there's too many bunched up lines, I don't want to trade in that direction because it gets really choppy. I like to trade where there's more room to go. And in this case, yeah, the ones that are automatically drawn are only on that time frame. What was the last one? So if I had like another BearTAC behind it, it's not going to draw. Or if I had like a BullTAC behind it and a new one shows up, it's going to erase those lines and draw the newest lines. It's kind of a trading view limitation that I can only persist the lines for the most recent of one type. Ideally, we would say even if it was 2 BullTACs in a row, just show me those 2 only. Don't show me the BearTAC that was further back if I had to choose. But right now, it's just the latest BearTAC, the latest BullTAC. When we get off of... Yeah, go ahead. I was going to say, when we get off of TradingView and have our own native chart, like we can give you an option to show like how many of the previous last ones that you want to see, whether it's a combination of bear and bull or just whichever ones showed up, give you the last like, 3 or 5 or 10, or maybe if you're really into research, you could say, show me all of them, right? It gets pretty messy when you see all the lines from all time frames, but it's an option if you want that. But one thing to notice though is using these lines. So I would say the 5-minute lines are way more significant than the 1 minute, but the 1 minute at a very like quick time frame still has significance. You could see here how we did crush above the 5-minute line, but then as soon as we hit that 1 minute, we rejected down. And the way I know that right now I can tell that this is going to be a downtrend is if this was going to be an uptrend or just consolidation, it would have just done this like for a little while and then pick something to go up. But instead, it's just ignoring this as support and it's just saying, I want to go down. So in this case, as you watch this price unfold, or the price action unfold, I would say that as long as this gap between that BearTAC and where the price is keeps getting wider, that's pretty much confirming that you're okay for going short. A lot of sideways chop right there. We tried to retest it, we didn't break it. So in this case, this was chop. To your question, like how do you trade the chop? I would say number one is don't trade in the direction of attack level, because that could be quickly, like you saw here. Like if you said, oh, I'm going to go long from that, you bounce right off of that. You got to be really quick to get your profits right there. So why not, instead of getting into a long here, why not wait for the rejection and get into a short instead? Right. And that's like basics of support and resistance trading. You have to decide for yourself, is this resistance, or do you think it's going to be support? And based on like the background color, I would say there's just so much purple. Like why would I want to fight the trend and go long. Like I'd rather go short. So what these serve for me is how to get out of a short. If I'm in a short here, like get out there. If I'm in a short here, get out there, not get in long. Yeah, I would say if we zoom out, like this was very choppy to begin with. On the 5 minute, I just didn't see any signals in general. And that's kind of where we got to go back to PJ's earlier point, right? Where he said, and this is probably the first time we're seeing it, is the large volume. And that's to me my first trade. Like, yeah. And you could see why, right? It wasn't the whole move, but it always gets paired with a nice exit criteria. Or not always, it very often gets paired with a nice exit criteria. And on top of that, because it happened from a BearTAC, you now have support and resistance levels. In this case, it's resistance because we're underneath and we're heading away with a lot of force. So the question is, will we retest it and keep getting rejected? But if we can get over the lines and we come back down, then it could be support, right? So it really depends. But I would, yeah, yeah. Well, bear tack to me says it's a bear trap. So it means that the first move is going to be a down and up. So be very careful and know how to get out of that before it goes up. It doesn't mean that it won't keep going down. It doesn't mean that it won't go up. It just means be aware of this like kind of move. If it was a BullTAC, it would be like this. And then from there it could either keep dumping or it could go up from there. It's just be careful of that. Like I would say for most people they should wait for that to finish. And if it just goes straight to the moon after that, like that sucks that we missed it, but that's like 1 out of 10 times that happens. Usually it does something like that and you could just get the like support bounce, or in this case like the rejection, like acceptance. You could always enter after the hump, not like get in and get stuck and get like shaken around. That sucks. Like it always sucks that you, yeah. Go ahead. Mhm. Yeah. Yeah, usually you don't want to react to the shift, but what they are informing you of is whatever move we just made, like let's say we were going up, if the next pull down is enough to shake the or change the color of the background from like green to red or vice versa, it means that we didn't go up enough to avoid that little chop being like influential in the background color, which means that wasn't a very strong impulse up yet compared to like all the other candles behind it. So what you could be doing is catching a counter trend bounce, or just simply like a little bit of consolidation where mathematically that move up that you just saw or that move down that you just saw was not like significant enough to withstand like a little pullback and changing the color. So that's kind of like a level of strength or weakness, right? If you go up tremendously and then you have a little pullback, like it may take a lot more pullback for the background to actually shift colors. And so the sooner you catch that move, the more protected you are from these little pullbacks. But if you catch the move like pretty well and the first pullback you see it flashes, it means that we didn't have enough strength to prevent that from happening. And I think it's because like all of this sideways action here is what caused it. If we went straight from up here and straight to down there, like then yeah, that little pullback wouldn't have changed the background color. Yeah. Yeah, that's the way I look at it is, especially if you trade high dollar amounts. I know that most beginners trade like $100 per trade, and that's not bad. Like you could still make a decent amount of money on a daily basis by doing that. But a lot of the bigger players will trade like 10,000, 15,000 on like shares or options like value. And I would never recommend somebody go in 10,000 on a small volume, right? I would say look for the large volume because that's where you could be best protected by either there's a market maker trying to shake somebody out of a massive opposite position, or there's so much like selling pressure that like they're not going to be able to withstand, like they can't hold the bus for you to be knocked out if there's that much selling going on. So you're safe, right? So for me, it's like to make sure I have a clean exit strategy, and to make sure that the larger I go, the less likely they'll try to shake me out. I look for these large volume in. And that's where it's frustrating. Like you see a nice move and you're like, oh, I want to catch that, and it was like just a small volume in. So you enter like right around here, and it like dips, and then you get out, and then it goes back up, and you're like, what the heck? Right? Like you basically interrupt the momentum, and it always take another look back at those trades and say, well, what was the condition that I entered on? Did I enter when like, 1, 2, 3 bars of background have already faded, and now I'm in like the middle of the move? And also, what did the volume look like when I got in? Did I get in on the big spikes, or did I get in after the big spikes? Right, and those should be clues for you as to like maybe why the market cared that you got in and punished you a bit before it actually went where you wanted it to. So in that case, you have to go into like diamond hand mode. You just got to ignore the fact that the market's trying to shake you and think, well, if I'm that strong that it's going to go up, I just got to endure the punishment because I got in late or because I got in with low volume. But if you're not confident, then it sucks. You're like, okay, don't do that. Don't chase the moves after they've occurred. Like that's too much confirmation that's going to go up. And by the time I get in, now I've got like very limited room to grow before it's going to turn around anyways. So like I've basically played a low probability trade. And that's what these signals are here to help, is if you see a large volume in, just like as long as you trust it, and as long as you plan to go in that direction, and as long as that was part of your like intuition anyways, it's like a boost in confidence that I don't have to wait, right? I don't need to sit here and wait to see how it develops. I can just use that as a reason to go with my gut instinct and also have a double confirmation. Mm-hmm. Yep. Yeah. That's a good question. So we initially developed these trend ins. I'm going to pause it there so that we can kind of study this one. So what you're going to notice is on these trend ins, they're not necessarily wrong, and they're not necessarily with bad volume. Usually these trend ins are trying to catch something that's going to have multiple waves, right? Instead of just one clean impulse. So you can see like how this large volume in was like a straight impulse, right? Like it was almost like the candles were unbroken on the way down. Like if you were to match tops and bottoms, it doesn't turn around at any point. But if you look at these trend ins, like it goes down, you got a volume out, down, volume out, and then it kind of like drops around, and then finally it's over. Like how do I know which one of these is the end? Right? I normally count on a good trend, it's 3 of them in a row, but that's not a guarantee either. It's like high probability I'll see one, medium probability I'll see the other, and low probability I'll find the last one. Right? This could have turned around at any point that it wanted to. So trend in usually means you've got to be good at counting Elliott waves, or you've got to be really good with indicator crosses to know which ones are the truer versus fake ones. Like this could be on an indicator, this could be like MACD cross 1, cross 2, and cross 3, right? How do you know to get out on cross number 3? Or how confident are you that you're going to see the third cross before you actually have to get out? Or similarly, like RSI, like I've saturated, now I'm actually going to go return the other direction. Like these are more for people who are better at withstanding pullbacks and knowing where to get out. And so I don't recommend new traders trade this, but for those who are comfortable with like the wave, the way that the market kind of like chops up and down, like these are really good entries too. Sometimes they're wrong and they turn around, but there's always a good reason to get out anyways. Like if it's like pure green background and you got in on a trend in down for short, like you would know to get out for other reasons than that you're waiting for the waves to count. But if you see it develop nicely, like nice solid background down, nice, like, well, this is a little choppy, but background's down, you can kind of assume that, yeah, I will have some interruptions. But if I trust my signals, if I trust my style, the trend in can still be very profitable if you know how to get out. So I would say that it's a little more advanced. Mm-hmm. Yeah, I mean, if I haven't used indicators in a long time, but we could take a look, and that's why like this is not meant to replace. It's actually meant to complement, like almost give you a different view. So I'll just do RSI because I think these are two pretty popular ones, right? It's what I started on for the beginning, and I found that these are really good for swing trading, but very hard for like options day trade scalping, especially because time can kill you as well as direction. But the general idea is you got a MACD cross here, right? That's where the trend in is happening. Now you got to like figure out like how to withstand the chop. So that was a potential cross up. That was a potential cross up. This is a cross up, right? This is the one that a MACD trader would get out of a short in. But how do they know not to get out on these two, right? And then they could look at RSI. Okay, RSI's oversold here, right? Should I get out? Nope. How about here? Nope. Only until here do I know to get out, right? So here's my exit on RSI, here's my exit on MACD, but I have to know how to withstand, like, not get out early, right? And that's why I'm like, for trend in, like, this actually is a very common pattern. Once you get used to these trend trading techniques, like, this is, you would actually be counting how many false exits there are before you actually get out. And that's why this could still be helpful. But if you don't know how to do that, you feel like I was duped. Because you see these pullbacks and you get scared and you get out. And then next thing, you know, it's like, I could have stayed in it, but this was not a good entry. I would say it's a good entry. You just have to know how to trade it. What I really like about this trend in this case is it came in right at the bottom of the BearTAC. So that gave it structure as well as a good trending signal. That's like double reason to like give it a try if you know how to trade it. Yeah, that volume was good. And actually, it's not fair to say like the volume, just because it doesn't have the spike, that it's not good. Spikes are good for impulses. When it comes to trends, like they're less clear as to what's a good volume. So in that case, if I was trading this just for trend perspective, I would say, okay, if this is where my spike was, anything over that line that I just drew, that to me is considered still a high volume, even if it doesn't say spike. So as long as I periodically am getting the nice like selling red candles above that line, I think I'm still okay to see if that momentum is going to continue to ride. It's just not as clear as something like that, right? Like PJ could get in, pop that trade in, like make his 200% and be done for day while we're sitting here like waiting hours for this to develop just to get like 80%, right? So it's like, pick your poison. Do you want to catch every move, or do you want to just catch the easiest ones? And this is well within PJ's zone because look at that, it happened at 11. Oh, well, maybe a little bit too late. He probably would have already clocked out by now. Um, Yeah, and actually we originally started trying to mostly focus on these trend trades. Like we weren't really confident with these impulse trades when we first started developing TACBotz. We were actually pursuing this, but we think that it's going to take a higher level of machine learning to actually properly weed out the bad exits and to confirm that these are good entries. Like it'll definitely have to come in with market structure. We definitely have to be a little bit more careful with what volume matters to us versus not. But we want to eventually get to a point where we can not have this so dark, like to say trying to, like we're trying to do that to like make it not as visible because we don't want people to like react to it right away. But eventually we want to make sure that we can tell people this is a good entry, but here's what to expect, but you're still in a good healthy state. Keep holding, and then we'll let them know it's time to get out. We're just not there yet with this signal. Oh yeah, that's definitely like Luis's I guess area of expertise where we start talking to AI and machine learning to like use historical data to come up with what if scenarios, almost like Doctor Strange trying to figure out like what's the alternate future path. Like we don't currently have like most of these signals are really clean and simple, to be honest. Like if you like spent like just a day looking at the way that we wrote all this, it actually isn't very complicated, to be honest. But we want to make it more versatile in the future, which means it will start to get more complicated going forward. But what we try to do is our first attempt at creating signals for a bot was as simple as it can be. Let's keep it simple and let's make it very consistent, very safe. And then over time, if that's not enough, then we'll keep making more complicated, more advanced strategies, and we'll never stop building new ones because we're just curious. But we want to start with the simplest of options first that make people confident. And then as we kind of branch out into more experimental for like, let's say you have a $100,000 position you want to trade over 5 days, right? None of these signals are going to help you. Like we have to come up with a different strategy for that. So we'll eventually like get to the point where we can scale our strategies based on the customer demand. But right now, we want to just help the beginner, which is if I could just have a bot that you could point at crypto for me, and I can make like $200 a day without touching it. Can you do that for me? That's what we're trying to go for right now. Yep. Sorry, you're asking. It kind of cut out a little bit. You're asking about exits. I don't know if it's just me, PJ. Did you hear the question, or maybe KJ, if you could type it in the chat because I wasn't able to catch everything you said. Okay, cool. Sorry about that. All right, let's see. Questions about levels and exits. Is volume out basically the exits? Yeah, so depending on the style of trading you're doing, we would say yes, the volume out is our intended exit, but that's for a specific like scalp. So if you're thinking like I want to catch the biggest move of the day, I don't think that the volume out is going to be your answer. But if you're like I just want to scalp this next move and I want to get out safely, that's where the volume out is your exit. When volume outs and levels converge, and from levels it doesn't have to be TAC, it could be like you're using Fibonacci or you're using volume profile to find like historical levels of interest. Whenever there's confluence between our volume outs and those levels, I would say they're pretty spot on usually, because not only are you getting a weakening of the price action, which is why our volume out painted in the first place, you're also getting to a point of extreme either support or resistance that can oppose the move. So now you have more than one reason to say I want to get out. And so you're saying, can it be construed that the volume outs are strong levels? Not necessarily. I would say that the volume outs are actually just showing that there was a weakening of market interest in like chasing that momentum. And so now the it's kind of like if you were to like, I don't know if curling is a good example, but you know like how you're when you're curling and you're pushing, I don't know what it's called, like the puck, right? You eventually let go, right? And at the point where you let go, you're no longer pushing it down the ice. It's going on its own down the ice, right? And at some point, friction, especially from somebody sweeping in front of it, the friction will slow it down. And so if you're a momentum trader and you see a volume out, you're not saying that I've reached a significant level. You're saying that there's no more like impulse to help me continue down this path. And therefore, if I only like to trade when there's high volume, high momentum, I'm losing both of those things I like at this moment, not because of a level, but only because the market's behavior is not supporting like more action in that direction. It could be due to a level being reached, or it could just be that the buyers or sellers were exhausted, right? The supply and demand is like starting to batch back up again, and therefore it's not going to keep going. And then the question is, would you use daily time frame charting on TACBotz to determine good levels? Seems like the colors and shifts would be helpful. Yeah, good question. So we keep looking at the 1 minute, but let's definitely take a look at the daily. And then we'll zoom into the hourlies too, because I actually use the hourlies way more than the dailies. But it's always good to know like what you're up against on the daily. So for me, the daily is telling me what kind of trend are we in. I would actually call this like no trend, honestly. Like I know that Tesla's been beat up quite a bit, and people would laugh at me for saying this is no trend. They'll be like, no, I made so much money playing puts, or I've lost so much money playing calls. There's no way that it's like no trend. It's got to be down. But just kind of look at where we came from, right? So we went massive crazy. This was like the whole Elon exercising stock options. So obviously didn't want to crash his stock by exercising. So the price naturally went really high, and his exits barely messed up the stock price, right? After that was exhausted though, like there was no more options to exercise. The market kind of just like free floated. And it was mostly down with a little bit of recovery. But at this point, you could see that the price action is mostly sideways, right? And there's a very clear top and bottom to that price channel. So to me, if you're going to play Tesla, you're probably not playing like long puts or long calls for like months. You're probably playing something that's more like selling contracts where you're hoping that the premiums decay, or like iron condor or butterfly strategies where like you're not worried about things. You actually want things that go sideways. That would probably be the smarter play in a time like this where there's a pretty clear sideways chop, than to just say like, oh, if I just bought like a ton of 2 months out puts, I'm going to make a lot of money, or I bought a ton of 2 months out calls, I'll make a lot of money. Those are less likely. So what that means is I can't rely on an overall macro trend. I got to zoom in. So let me do that. Let me zoom into like the 5 hour, and see if I can see a trend pick up here. So within the 5 hour in the past few days, there was a push up and a push down. So that's like what could happen is we go back up and down again, right? Keep chopping. So not too strong. Let's go to 3 hours. Here, this is interesting because now we have some structure from the TAC levels. We have the high and the low, and we're kind of in the middle. So you could tell that from this point we started dropping, right? And that's 1, 2, possibly like we're going to hit a third wave down, or we've already hit it and it was very small, but we're really going sideways. So one very possible scenario is we're going to retest and then reject before we go further down, or we're just going to go sideways and then just give up and go down and then bounce. So for now, I would say there's no strong trend, but I have at least some targets to say, like, am I going to go to hit one or the other, right? There's two methods of thought. It's not a price prediction. It's more of just like trying to figure out what are my probabilities. Right now, I have a high probability of making good money if it does go up, and also a similarly high probability of making good money if it goes down, because there's not like levels to interrupt those moves. And let me go further down to the 1 hour. See if we get any more clues. Okay, so now we're starting to get like this is like now Chris's bias. I don't want you guys to trade this way, but this is how I would think about it. Is my preference is always to wait for the move that has the least interruption. Right now, if we went in calls, yes, you could make money in calls, but you have 1, 2, 3 levels to break through before you can go any higher. And any one of those levels could be a point of rejection. So if I am scalping, I could definitely go scalp long, but I would respect those lines, right? Get out there, probably avoid all of that and wait for it to break to just do that quick scalp too. So technically I would say this is one play, that's another, but this is probably a way more fun play to get down to that level that we saw on the 3 hour. So from a shopping perspective, I would shop for Tesla puts to go down and test that support, or I'd be very quick about my Tesla longs to go and test these resistances. Yeah, and yeah, I mean a break to like kind of shake out this kind of like long rolling downtrend right here, like that lasted like a couple days already. That can make sense just to kind of like, you know, shake things up a bit. Another thing I like to do is look at the options. Like, I don't know if you guys use Shift Search or not. I really like that tool from a research point of view. I found that I can't really use it for live trading because it's not like, it's a 15-minute delay. So, I mean, unless I'm trading like multiple days, having 15 minutes of delay in data to me is like a showstopper. But when I'm trying to figure out why things are happening, like every other 15 minutes, it's a fantastic tool, because what you could find is that the open interest on Shift Search says that like as price is going down, people keep chasing puts, and at some point it saturates, and to shake them all out, it has to go back up, right? So they could be like loading the spring for a quick shakeout, and in that case, you might want to just be out of puts, since like there's so many days of puts in a row that would have printed. At this point, we got a green background that's forming on the 30 minutes, so maybe this is a good time to shake all these puts out, the ones that are like still out there. And so I would before I make that decision to try to play the quick chops up to like punish whoever's still holding on to puts, I would definitely like look at the conditions that I see on Shift Search to make sure that matches my thesis. But I wouldn't just go long just because I think that. I would then zoom in into the 5 minute, and I would start looking at like, well, if that's going to be my thesis and I want to go long, what's my real reason to go in? And if the real reason doesn't show up, like volume ins or whatever, then I would stay out. Because I don't want to play it off my bias. I want to play off the signals using what makes sense as like the reason why I chose that direction. So it's almost like a biased fact checker, right? Like if you're like, oh, I'm going to go long and it's because I want to shake out the bears. But if everything says like large volume in short and you're still pointing long, like why didn't you go and collect some of those like easy plays? Why are you still playing long when like there were clearly short plays to be had? I'm sorry, I didn't catch that. I feel like it's like, oh, swing trading? Yeah. Good question. So again, full disclaimer, I don't really swing trade anymore. I used to back like in 2010 to like 13 timeframe. I was more of a swing trader because I was forced to. Working in a bank, they have a 30-day, like you can't trade the same ticker in 30 days. So basically it was a month-to-month trade in my opinion, but that was kind of more passive and it wasn't like a very active swing trading. So what I would say is no, it's compliance. Like if I have inside trader information, right, and I act on it within 30 days, then I put the firm at risk. So it was less about wash, it was more about like proving to our clients that we're not trying to trade against them, because in 30 days, like all the data that we have is like meaningless. Um, so that being said, if I'm going to trade a swing trade, I would definitely start at the hour and look for some trends. So actually, I don't really like Tesla's movement these days. Let's look at AMD. Know that it's had some down moves, but I just kind of want to like not look at Tesla right now. It's like so crowded on Tesla. Always, I feel like mostly Tesla's like movements are due to like how much options plays they attract, and that's like more of like artificial stock movement, not so much like natural. I know that most tickers do have a ton of options plays, and that's why like it gets choppy. But Tesla's like the one that's the most crowded for options. It's got the highest, usually the highest notional value for options plays per day. All right, so for AMD, like if you're like, how do I catch these moves up and down? Like 3 hours not really helpful, unless your horizon's only a few days. You could kind of use that for a few days, but I would say right now I don't see a whole lot of clean data, so I'm going to keep moving up until I start to see like some real trends. And I think starting on the 5 hour, I start to see some really good trends. And the reason I say that is look at, and this is obviously hindsight bias, so don't like think of this as like market wizardry. This is just using what I see on the screen. If at the time that I wanted to go long on AMD here and I got this large volume in, what I like is we're getting a large volume in near attack level, right? So I know that there's a potential support here. I know that the market is accepting it by pushing it up. So the only question I have is if I'm going to enter a long swing trade and I might start it in here, I don't want to start it until after I cross over that line, because that's my support, right? And that way I could put my stop down here, right? So my entry would be the top line as support, and my stop would be the bottom line as support. Anything below it, and I've pretty much lost the battle, right? So if I start my position here, and this is obviously like perfect timing, so well, technically this is better timing, but assuming I start here for that good reason, I'm going to be watching this price action, and I probably would get out here, if not take some profits to like pay for my entry, and then let maybe some runners ride, but I wouldn't try to catch that top. The reason is I can't consistently get in on a large volume in and consistently blow past this volume out to get profits. I would rather go with a more consistent play rather than the top. So my guess is this is a good entry. That's a great exit. You're probably completely out by then. If you really want to hold it overnight and catch the top, you would do it with small positions like runners. Ultimately, though, this fade tells me that this thing is ready to either slow down or turn around, and it slows down. It just goes sideways, right? It's like I'm only hearing every other word you're saying, so it's hard for me to know the full question. I think you're talking about invalidation of an idea, but I'm not sure. Like, Okay. Oh, when to get out? Yeah. Yeah. So in this case, my first sign of invalidation is if I did not get out here, right? And I had a really good reason to stay. The reason I want to stay in there is because I'm above this level. The price action is really nice. The background is solid green. So that's validating. But when I see this out, and if I were to, let's say, just ignore it, because I'm like, I've been told, someone told me it's going to go even higher, right? Um, and I, let's say, just say, you know what, I'm not going to care about volume outs. To me, like two volume outs in a row is like, why are you still in it? But if you really don't want to pay attention to those, then the last bet is look at the background change. That's an invalidation of this move up. It's saying like whatever you did to get up here, it only took this much to stop the trend from painting green. So at this point, you've lost almost all of that impulse up. You've actually gained a huge impulse down, which is why the background changed colors. So if you're still holding on to a long after that, maybe your goal is to swing like across multiple quarters or even a year. In those cases, yes, you can ignore it. But if you're a swing trader who just wants to do like no more than a month at a time, like how much time do you really have left on the clock that you initially intended to wait for like even more higher highs, right? So at this point, I would say because you had such a nice run from large volume in to volume out with a solid green background, the minute we break that, you probably want to get out. And if you didn't get out, then this fade is also helping to invalidate to say you're looking for more up, but I'm telling you that you've given up your upward momentum. The best you can do is hope for like a small recovery, which sometimes happens. Like there's like a little one last push or hurrah to create a double top before it goes down, but that's a risky bet. Why not just take your gains and run? Right. This is already a nice play to begin with, so why not just be happy and move on? And that. Yeah. Yep. Yeah, and part of that is we're still not sure what to do with the case where this is still healthy volume, right? Like that's actually why we have these like faded triangles. We're saying that that's actually decent volume. It's not like unnoticeable volume. It's actually pretty good. Um, Usually, what you'll see is like when that happens, not all the times, but most of the times, you'll see like a small volume in, and that's not normally a great time to load up really heavy. You probably want to like add to your size as you go. But at the end of the day, if you didn't have large volume in, if you didn't have small volume in, and you just studied this price chart, um, I would say as a swing trader, like you could technically go higher. That's probably the answer, right? Just keep going up until you see what you want to see on that move. And so here's your small volume in, here's your two volume outs as a result of this, right? So you're not going to get a large volume in because the way that we programmed it, we don't want your entries to come in like halfway through. That's kind of like chasing. We want you to start early, and then we want you to get out before it's too late. And if we're starting you in the middle of the move, then like you're not going to be happy that we only got you in for two candles and then you have to get out, right? You want to let it ride as a swing trader a little bit longer. So the answer usually is just keep checking the multiple time frames. Like here you get a large volume in, no specific exit, but you do get a background change. And then here you get a small volume in, and you do get two reasons to exit before the background changes. Yeah, and it's possible like the higher up you go, the more this plays into it. Like if I go to the daily, now I've got, I don't have a large volume in, but I do have a BullTAC, and if I play the price action off the top of the BullTAC, and I keep in mind that the large volume in is like currently prohibited. Well, like we're talking about it as a team. Do we want to still show the large volume ins that are happening like midway through? Like in the background, our code wants to paint a large volume in somewhere around this line, but we've told it suppress it if it doesn't come in early enough, right? Yeah, yeah. So that's kind of one of the things that like Justin's not on the line, but he PJ and myself were talking the other day about like what we would say as our ideal entries. From a bot perspective, we were like, what's the simplest answer? And right now, the simplest answer is just use the volume or the large volume in by itself. But we also have on our next to do list is okay, but that's not like the end state. That's just like easiest answer right now. In the end state, we want to combine our signals so that when there's confluence between the TAC level, the background, the price action, the volume, we want to still like say that's good enough and still give you an entry to say, because we have structure, because we have volume, um, go ahead and enter here, right? Because technically this would have been a large volume in anyways. We only hit it for a separate rule. Yeah. Yep. Yeah, absolutely. So what you're observing is we are options junkies, and a lot of times because we grew up on SPY, we were playing zero DTs 3 times a week and like next day expiry twice a week. So 5 weeks of like lotto plays. And so what we found when we started building these signals was you don't want to. You usually actually want to sit out of the first move when it's like same day expiry and it's like SPY opening like bell. You don't want to get pulled down because that wrecks your lotto, and you actually want to try to catch it on the bounce up. But if you look at it from a swing trader perspective, it's a little different. Like you've got a lot more time on the clock, so time's not going to be against you as long as you configured your trade correctly. If it's like shares or if it's long dated options. So like you said, if you're not afraid of the bull trap that's usually caused by the BullTAC, you can ride the first leg up and then just use a good reason to get out before it's too late and the trap is sprung. And then that way, what you're doing is you're actually waiting for, it's like, okay, I took that acceptance and I got out for some reason. I'm going to wait for the next acceptance, and in this case, it's this small volume in that happened right near where we were about to touch, but we didn't. That's a good enough reason to say, let me give it another try to go long. And when this background turns solid and it stays solid, that's like I can start adding, right? Especially if I have long-term options, I can start adding. And at some point, I need to stop adding. I can't just add all the way up. That's like the opposite of dollar cost averaging, right? It's like you're killing your gains. So you come up with your reason to first enter and your next reason to start adding, but then you eventually have to just let it ride and just enjoy the fact that you got a good entry. And in this case, yes, we had one interruption, like one red background. Does that mean exit? My rule of thumb is if I'm trend trading, I'm going to look at the average of how many greens I had versus how many purples and or reds, and if the number is significantly outweighed, I'm going to just ignore that one interruption because it's natural for that to happen, and I'm going to see what happens next. If the next one is like purple or red and the next one and the next one, obviously I'm wrong. But if just one comes in, I'm not getting out there. I'm actually waiting for a stronger reason to exit. And in this case, it's this small volume in, or these fades are really good reasons to get out. But you've already gotten in here, so who cares that you gave up a little bit to confirm those were good reasons to get out? Yeah. And two thoughts about volume is you could see here that this volume spikes here and that volume spikes here, and that kind of precedes the red background or the purple background. A lot of times the FOMO candle is the one that turns the price around, but at the same time, what it does is it gives you a chance to get out, right? Or a chance to wait and watch. Right? It gives you something that makes it that these little pullbacks aren't as significant, and it gives the next set of buyers a chance to keep the price trend going. So you can either treat it as a sign to get out and wait for a re-entry, or you can say, well, given that happened and given that I started early enough and this happened, this pushed me even higher, I've been given a little bit more wiggle room to let it fall before I actually want to get out. Right? So you're probably like in a swing trade, let's say that you're just doing shares, right? Oh crap, my ruler tool is kind of hidden. Yeah, I mean you've got 28% as a result of that buy spike, and then what you give up is like 8%, but you've already gained 20. So kind of that buy spike helped you to withstand that pullback to say maybe I want to wait. And if you do wait and you get out at these fades, or that, let's just say you got out early on the small volume in, because that's small volume in plus a background, it's a really good reason to get out. And let's say that you even waited, you're up 53%. I mean, obviously it took you 47 days to get there to get to 53, but if this is like your retirement account or something, like that's not a bad play to just let it ride. and then just lock in the profits. Yeah, I yeah, I just don't have the attention span anymore because there's so much happening in front of me with like options and levered contracts and crypto that I don't even have the mental bandwidth to like focus on these anymore. But yeah, if I were to be a swing trader, I would try to stay at like the hourly and above, and then based on that ticker and that time of day, or that time of like the market cycle, I want to see where the cleanest patterns exist, and I'll want to use that to help me weed out all the noise from the lower time frames. And if I trust it and I think that the market does have other catalysts and reasons to go, I won't like use only news and what Jim Cramer says to like go in a direction. I would definitely double check it with what I see on this chart. Because if at this moment, and we know like the way it works, right? If at this moment Cramer's saying buy, 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 right? He's probably helping him and a couple friends get out on top before it dumps, right? So you don't want to like just use news alone. You're going to say, okay, if he says it's going like we should go long, let's say he said it right here. He said like AMD's an absolute buy, right? And it does do this. You're like, wow, he was right, and then it does that. You're like, whoa, what an asshole, right? But it doesn't matter because even though he said it and even though it pumped and dumped, the background's still green, right? The volume is still pretty darn heavy as it is. You could still ride it to the exit. You don't really even have to worry about what he said. That's just an interruption of the overall trend that it spiked, but it, yeah, yeah, absolutely. So finding the right time frame was like one of your big questions in the beginning, like what's the right time frame? That's the hardest question. I can't answer that. Like I can't tell you always use the 5 or always use the 10 or the 1 hour. Like I don't know. I have to go and look at the signals first, and then I'll just use a recommendation because if I'm sitting here on this day and it looks good, I don't know that the next like months it's going to look like that. I have no idea, right? That's like there's no crystal ball. I can only see what happened previous to that. But if I shop to like the lower time frames and I see that it's like barcode city, I'm not going to recommend you use that for sure because it's not going to inform you of anything, right? So I'll definitely try to look back to say like what was the time frame that had the cleanest like signals, large volume in to some kind of exit reason, and I'll use that as my bias for like what I would do for a swing trade. We're yeah. Mhm. Yeah, 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 and if you look at it like this is what's underlying, right? One, two, three waves up, and then look, there's one, two, three waves down. A lot of people see that and think that's the bottom, or they see this and they think it's the top, right? So that's kind of where people get messed up is they don't understand the market rhythm. And even to me, I could think that like, oh, this is one, two, right? And then maybe that's three, and then I'm done. That's like inverse head and shoulders. We're going up, right? I could think that, but if I'm unbiased, I'm not even in the trade, and I really zoom out and I think about it, I'm like, this makes total sense, right? Three waves up, some interruptions due to overnight or due to options plays. But if I zoom out and like use a little bit of a like, you know, one, two, three, right? That was really bad. One, two, three. Yeah. And to me, that's algorithms doing their job. Um, I know that the theories are like Wyckoff and Elliott and other types of patterns, but the only thing that trades that rhythmically is a computer system. And the only thing that fails to see that is humans with emotions. Because we don't care like where it's going in the next 10 months. We only care that right now somebody made 200% on a massive YOLO play and we didn't catch it. And that's all we see, right? But if we ignore all the like the FUD and all the excitement and the euphoria, if we just look at it like, almost academically, like it's pretty clear to see that like you're not going to be able to call a perfect day trade using this pattern, but if you're swing trading, like you just got to be super patient and let the market do its job and not overreact, right? And one thing I would say is if you are watching these patterns like the up wave and then you look at the down, look how shallow the down was, right? It's almost like it's showing you a bull flag anyways. That's about to break out. So Yeah, like this is probably like more of the flag is starting in there, but then it kind of extended into like a wedge, right? Um, so if you follow the patterns that you can trust, like you actually can use not only those patterns but even the background, right? So if your assumption is eventually this thing's going to break out, we'll wait for a small volume in, wait for an acceptance off the BullTAC, and wait for the nice solid green to show up, and that confirms your belief, right? Versus you just believe it, and every time it turns up, you're trying to like go long, and it's like you're getting crushed every time you try to go long. Yeah, and it's fair because no one's thinking about 2 weeks from now. Everybody's thinking about right now who's making money. So if you came in with a thesis like, guys, I think this thing's gonna like keep riding down. I'm gonna be patient and wait for three solid waves. Meanwhile, they're like, I just made $200. I just made $2,000. I just made $50,000. Right? You're not. They're not hearing you because they're not waiting for this move right here. Or at least by the time we get there, they're like, oh yeah, see, I called it. Like, YOLO AMD calls. I made money here, here, and there. But meanwhile, you're like, well, technically, there's no reason to catch these reversals, right? These were counter trend. Um, mhm. Not really, because we never designed the colors to predict future. We just try to like let them help you to understand current and past. So if this thing is purely solid green, like I don't know that this interruption is going to turn back into green. I just need to like wait for the next closes to say that yeah, it's still green, right? And the reason for that is all it takes for you to like stop trusting me is I'm like, okay, because of this green, we're gonna get like 10 more bars of green. If we get a bloody candle like that, nothing's turning green anymore, right? Because this yeah. Mm. Yeah, currently we don't do that from a like a pattern recognition point of view. But yeah, if it were me, and I'm not even like measuring the lengths of those candles, I'm probably like at the very basic level drawing price channels, right? And if I do that, I would usually like start with some kind of an anchor, right, and then try to draw it to like wherever the nearest. Obviously, this should be a little bit lower, and then this maybe a little bit lower too, just kind of make them parallel for a price channel. I would literally be looking at, okay, if I got in here on this large volume in, and I rejected, and I came down, and I started creating structure, like this tells me that when I break this channel, it's probably time to wait, right? I don't want to keep playing longs when I'm outside that channel that I was usually that before I was trying to like use to go higher. So the only reason I stay in the trade here is because the background's green, but the reason I get out of the trade here is because the background's now red, right? And then I stay out of the longs until I see another green background, and that's when I start going long again. Um, so no, it doesn't, but you can still play, like you said, if you're measuring the height of that and measuring the height of this, or using Fibonacci like extension or retracement, like you could technically ignore first, like you just turn off our signals first, do your work, and then turn them on to see if like we confirm what you're thinking. But most of the times we are not trying to predict the future. We're just trying to show you the mathematical representation of what's happening right now. And if you start to see patterns like large volume ins to like lead to volume outs, like you can come up with your own reasoning to hold it to the next volume out. Like we don't have to tell you how to do it. Yeah, but I mean it's a good question. I don't think we're there yet, so yeah, I can't say it for sure. Yeah, these are like fantastic questions. I know that like half of what we covered probably not everybody needed to hear, but like just hearing your perspective and what you want gives us a better idea of how to build the product going forward. So I definitely appreciate you taking the time out to like ask your questions. All right, man. I'll see you in LKS tomorrow, and take care. Yep. Yeah. Sounds good. All right. Take care. Bye.